The new IR is DPI. It's all about distributions. And we've had an environment where, if we look at the post-GFC period, we had a 10-year period that probably was the best period that private markets had coming out of GFC. So from 2010 to 2019, 2020, the average distribution yield, which is the cash distribution received by investors compared to previous NAVs, averaged 25%. So on an annual basis, investors could expect 25% of distributions from the previous NAVs. And then we got to the late 2010s. Things felt pretty good. Returns were pretty good. And there was COVID, so everything took a pause in COVID. And we understood that during COVID, during such disruption, there would be a slowdown. And then we went into 2021, where actually distribution yield went over 30%. So everybody felt even better, especially coming out of COVID. But then something happened, inflation and the cost of money. So that has changed drastically the dynamics of the marketplace. And so we've been in this environment now for 2 years. But actually, if we look at the data, the slowdown in distribution yield actually started in 2019. And we've been essentially in that dynamic for about 5 years. And so that's imperative. And if you think about actually DPI and IR, they actually are linked. They work together. If you don't have DPI, the IR will take a while to show some positive numbers. And so we've gone from a 25% distribution yield to about 15% in 2022, to about 10% in 2023. And if we look actually at the first half, especially the first quarter of 24 was actually the worst. In some cases, it was single digits, depending on which segment. So that's putting a lot of pressure on investors' portfolios. And the big question is, we have about $3-4 trillion of unrealized NAV, and how is liquidity going to be achieved by the industry? Because those are also record amounts. And if we look at the size of public markets and what's happening in M&A, one can make the scenario it's going to take a while. So before we go to the 25% average distribution yield, we might have to wait a few years, and that's going to put pressure on the industry, because if you don't get capital back, then either you increase your allocation and you decide to have bigger exposure, but that might not happen.